Hey everybody, welcome to the Spartan 101 for August 28th, 2020. Today we're going to be talking about momentum and follow through. But before I do that, I want to just quickly talk about what's going on with these webinars, especially if you're brand new to watching them. So if you guys are new to watching this webinar right now live, or you're new to watching this recording, what you need to do is go back through the webinars before you watch this one and watch some of the ones at the beginning. Now, the ones at the beginning that I've done in 2018, if you scroll all the way to the I think the left, you get to those videos, or all the way to the right, sorry, you'll get to those videos. And in those videos, what I do is I talk about the foundations of the risk reward, and I talk about the foundations of my technical system. So what you'll see is me go through risk reward, and then you'll see me go through my time frames in terms of 10-minute, hourly, daily. I'll talk about the EMAs that I use on each time frame, support, resistance, how everything works together, how all these time frames coincide with one another before you get into the other topics. And the reason why is you want to understand the foundations of how I do everything before going into more complex things. Everything builds off of that information. So go through those webinars, and then what I recommend is going through the webinars in this order. So if you go through the webinars after that in this order, basically foundations of the Spartan technical system, so it's a recap of that, and then raw technicals, chart patterns, trading the open and pre-market, trading intraday and scanning, and then behaviors, routines, psychology webinar. Then you can basically go through all the webinars in any single order. You got to understand the basics before getting into the more complex topics is all. So do that, and then you can watch them in any order after that. You might have to watch them a few times to get a good sense of how things work. My other recommendation is when you look at the information I'm giving you in terms of the technicals, how I set up my charts, you set up your charts the same way, and then you go back, kind of do a little bit of back testing, see if it works, and then or see if you can get a better understanding by doing some back testing, just basically looking at old patterns, etc. And then you go from there. So anyways, that's that. So momentum follow through. The whole point of this webinar today is going to be talking about momentum setups that I'm looking at out the gate. So especially in the morning, I mean, I'll talk about some on the swing side as well, but mainly this is for a day trading topic. And I want to talk about just names that I'm looking to break out and see continuation the entire day. There's a whole bunch this week that worked out nicely. There's ones that we held through overnight because I figured there would be some follow through. We'll talk about that as well. But like I said, the main concept is let's try to recognize these patterns early on in the morning and captivate on them in terms of have the conviction to hold these positions, as well as understand the risk reward in them before we take them, so that we're well positioned. So let's take a look at just some quick little information in this webinar, or in this PowerPoint, and we'll kind of go through it. So what is momentum? What do you think it is? Momentum, you don't have to answer the question, guys. I was going to ask you, but I think you guys know. Momentum, basically, we're looking for strong directional moves one way or the other. Strong directional move on a stock like, let's take a look at, I don't know, anything. I think one of the best momentum names this week was probably Netflix. Strong momentum move, strong continuation move to the upside. Very directional, almost linear to the upside. That's what a visual representation of momentum looks like. A visual representation to the downside could look like Abbott today on the sell-off. Basically, straight down. That would be momentum to the downside, and then it started to bounce, and then it started to almost get some more momentum. It bounced off of last day's low. But this little move right there, momentum. This move up here, momentum. So what is momentum? Directional, strong directional move. There is a big importance in volume on momentum. Typically, what you see and what causes momentum is higher than relative volume. Relative volume is the amount of volume a stock will typically have, like an average of volume a day. When you have a higher than relative volume, then you basically have higher than normal volume on the chart. Now, the bigger this increase is, the more likely you're going to have continuation and stronger momentum in one direction. Momentum can happen in sectors. It can happen in individual names. Typically what we're seeing now in this market is individual names are getting momentum and going. You're not really seeing sectors all move together. You saw a little bit of it today, and this could change in the next weeks going forward. And we can start looking for, okay, NVIDIA is going, what's sympathy of NVIDIA, AMD, MU, AMAT, AVGO. And we can start doing that later on when we look at sectors. But right now it's more so individual based names. It should say sentiment, not sediment. Anyways, sentiment means basically, what's the sentiment in terms of, in this market, what's the sentiment? It's tech stocks. That's basically what we want to be in. Those are the strongest names. Those are the names with momentum. We're seeing a little bit of a shift in the last 2 days into value-based names, and that's important to recognize because those names can start to get some momentum in them again. We played those in, I believe it was March, when they were coming off the lows, and they had a ton of momentum off the lows, the value-based names. We may see that again, and I think we will see that again because money from tech is going to rotate into more safer assets to own, because these things are trading at pretty crazy PEs. But until that actually happens, we kind of stick with what has momentum, and still it is the tech names. Speculation, speculative momentum is more so kind of like low float stuff. It's more so, not as great risk reward skewed in your favor, and the probability of it working is lower. I want to focus more on momentum intraday. Am I recording this? Yeah, always, boss. Always. And I want to focus on more so momentum intraday, which kind of removes the speculation out of it because it's all based off of chart patterns. It's all based off of, breakouts, etc. So that's pretty much what I want to talk about in that regard. Now, let's kind of just get into it. Now, when I talk about momentum, what I'm looking at is chart patterns. And what I'm looking at for the most part is breakouts early on in the morning. There's a couple different patterns I look at in the morning for these things to occur. And primarily what they are is, number one, first and foremost, I'm looking at range breaks. And I'm looking at range breaks to all-time highs in this market. So these two things are the two drivers in this market that I have the most conviction on. And these are the two things I keep going back to every single day in the morning. Range breaks, either last day range high, recent range high, or an all-time high breakout. This is where you get your continuation higher. So let's take a look at some examples of this. I mean, there's a whole bunch of different ones from this week, but let's take a look. A good one, I mean, we're on Netflix, so we can kind of just take a look at this. But a good one on Netflix is a recent range high break to the upside. There wasn't any news related to this, by the way. It just broke out randomly. So the cool thing about momentum is when we get momentum to the upside, you tend to go through various resistance levels. A really easy way to see if a chart has momentum is it goes through a resistance level like it's nothing. It doesn't really pull back or anything like that. It just goes through that resistance level like it's nothing. In this case, a recent range breakout to the upside, a range break, like we talked about. This was the setup, and this is why I set these alerts on all my charts, guys, because I want to see this stuff in the morning. So I would bring up this chart in the morning, and I would look at Tesla, or not Tesla, sorry. I would look at Netflix breaking through this recent range high. As it broke through this recent range high, I would immediately think to myself, holy crap, this is a breakout, very big breakout on the daily, and there is a ton of volume behind it immediately out the gate. This thing's broke out. It's got room all the way towards 510, 511. I don't know it's going to be a huge momentum play yet because it's right in the morning. It's early on. But I do know it has a ton of room to the upside. So the probability of this thing being a momentum mover is very high, or higher than any other sort of type of trade. So in this case, break of the recent range high. It pushes through the next resistance. I immediately would think to myself, this thing is probably going to have extreme momentum the entire day or for a long period of time. It literally just went straight through that level. What's another, and this is for the guys in chat that are here right now, what's another very clear indication of momentum on this chart? I see two things. Volume, okay, we already talked about that. 4 EMA, what about the 4 EMA? It's riding the 4 EMA, yes. Key. There's another thing that tells me there's momentum in the name. Can anyone see it? It has to do with the 4 EMA. Sunset got it. Extension, and then what happened? Extension and held up. That's an indication of extreme momentum. When a chart gets extended, holds up, and continues to go higher, every single time you get a squeeze. extreme momentum. The probability of that 4 EMA extension working is like 90%, 95%. If you see it hold up and continue to go higher, guess what? You're going to squeeze to the upside. So you can see the volume obviously wasn't huge, increasing. Chart patterns that we're looking at intraday 4 EMA, that immediately triggers me to go, oh, this has got momentum. And it's very black and white to see. It's either riding the 4 EMA or it's not. You see this 4 EMA extension that happened right here. We all can see it. Held up, continue to push higher. Held up, continue to push higher. That is an indication of, like I said, extreme momentum. So that is where you can look, like I said, to either roll or you can have some conviction, more conviction on the upside. In the morning, like I said, what you want to look at is range breaks. In this case, recent range break to the upside on the daily chart with room to the next resistance level. This one had about 10 points of room or 11 points, which is quite a bit. Once you break that resistance level, if you go straight through it, then that should also trigger something in your mind going, this just went through resistance like it's nothing. It's riding the 4 EMA, and it's a recent range break to the upside. This is probably going to have some extreme momentum. The other thing about Netflix on this breakout was, another thing that should trigger something in your mind was just how much room it had to the upside after it broke that resistance level. Broke 511, had room towards 535.86. So we're talking another 26 points of room to the upside. That should go, that should ring some bells in your head, and you should recognize that and go, holy smokes. Not only does this thing have momentum, it's got a whole ton of range to the upside. So some key components of momentum, recognizing it, are breakouts on the daily, range breaks on the daily with room. There's volume behind it. And then visual representation of momentum riding the 4. Momentum is not rocket science. And you do need to be able to recognize it when it starts early on. And if you do, you can capitalize on it. But the thing is this, not all things that break ranges to the upside will get this type of momentum. It's your job to watch them, control the risk, and if it does start to get that momentum, recognize it fairly quickly. The key factors are always going to be momentum, are always going to be volume behind that breakout, more range to the upside, and then basically going through resistance levels like they're nothing. And you add in on the breaks of the resistance, right? Yes, exactly, Michael. So this is a good example of that. Let's take a look at Roku, which happened the same day. I was in Netflix on a swing, so I really didn't bother to trade it too much that day intraday, but we did play Roku on that swing that day, and we held it the entire day. And it was the exact same sort of setup. And I'm going to link these two charts because it would be a lot easier just to see what the heck's going on. So, same sort of setup. This is Roku. Breaking out of a recent range it traded within. So basically, similar. Now, the one difference on Roku, I would say, is you can see how tightly wound it was. Netflix no doubt was tightly wound as well, but you can see this Roku is very tightly wound the last couple days. And when you see that, when you do tend to break the resistance to the upside or to the downside, that range to the upside or the downside, you tend to get a stronger move. There's a lot of pressure. Basically, think of it like, pressure building within a container with two doors. When one of those doors breaks, it's going to push everything out that direction fairly quickly. And in this case, that's what we saw, right? We broke to the upside and we started to get momentum right away. So same sort of setup. This one, I just had an alert set as well. It got triggered basically right out the gate, immediately triggered. I looked at the chart. I immediately started to buy calls, and there was immediately sweeps and stuff like that coming in on the name as well. big sign on that was the big key on this one was the breakout of that range on the daily to the upside. Did I know it was going to get this much momentum? No. I didn't really realize it until it got up to like here, and I went, okay, this thing's probably going to get continuation the whole day. So broke out on the upside, tons of volume behind it, 1.2 million shares traded within 10 minutes. Very bullish. Rode the 4 EMA to the upside, went through the first resistance level like it was nothing. Went to the next level, obviously had a little bit of a pullback, but still held that 4 EMA and continued to go higher. Whenever I see the stock hold the 4 EMA, maybe test the 8 and then continue to go higher, that's also another indication. I mean, as long as it's holding that 4 EMA, you tend to get continuation the entire day. Let's take a look at Roku today. Same sort of setup, except this was something a little bit different. I'm going to flip it back to the daily. You'll probably be able to recognize it when I do this. Oops, when I do this. What was the reason for momentum today on the daily? Or momentum for today, Roku this morning? If you waited for the Head and Shoulders breakout, you would have been in the stock late. I'm showing you the daily. It's a hint. I'm not showing you the exact reason why. Ah, there we go. Downtrend break. If I flip to an hourly, it would be way too obvious. I literally showed you this morning too. See that flag on the hourly? Same sort of rationale. Volume came in right out the gate, broke the flag to the upside, started to rip to the upside. We already knew our levels. Range break a last day high, continuation higher. The Head and Shoulders breakout on the daily is technically a range break as well. And then obviously an all-time high range breakout is an all-time high breakout as well. But same sort of thing. I'm looking for a breakout on the daily or a breakout right out the gate with room to the upside. I think let's just dumb it down even simpler. What causes a momentum move? A momentum move is caused by a breakout, typically early on in the morning within the first 10 to 20 minutes on the daily chart. Just make it so simple. A momentum move is typically caused within the first 10 to 20 minutes when a breakout happens on the daily chart. Whether it's a downtrend break, a range break, an all-time high break. The highest probability and highest momentum movers will be all-time high breakouts if they happen right in the morning. The second highest probability will be a range breakout. The third highest will be this flag breakout on the daily or on the hourly. You're going to see them both. I think another, when we talk about EMAs, crosses, stuff like that, I mean, they're not as high probability, but they definitely do warrant a look, and we will look at some. Could Roku not have been a sympathy from Netflix as well? It was actually kind of the other way around, Justin, on that day. I think it was the day it ran, it was like a price target upgrade or something. I can't remember what it was. Netflix just randomly ran that day too. It's almost like Netflix was a sympathy off of Roku. Is there a way to set an alert in a trend line break? Trend line. I think there is on TOS. Definitely not on my system. What I do is I literally set it at that breakout point, Shaw, and I'll have to move the alert as time goes on. Yeah. So Kevin's just saying there's scripts there for that for Thinkorswim, so you can definitely do that there. But I've seen people set it before on Thinkorswim, and I thought it was brilliant. I think that's awesome. because it makes life a lot easier. I physically just move my alert every now and then. A lot of the times, if I think that breakout's going to happen in the short term, I'll just have the chart up on the side anyways. So, range breaks, all-time highs, flag breaks on the daily chart. That's what causes these types of moves. And they have to happen within the first 10 to 20 minutes in the morning if you want that larger momentum move. Why should this happen intraday, or why should this happen in the morning and not intraday, guys? Think about it just from a logical standpoint. Why would we be looking for these moves right out the gate, not intraday as much? Kevin said it. There you go. First person answered it. There's higher volume in the morning. That's it. There's actually another reason too. The other reason is you have the amount of time that the market's open. You have the full day for it to run. You can move for the most, the full day. Typically, you don't see full day runs though in the market or in momentum plays. Most likely, they're going to be to like 11, 11:30, and then they start to come in a bit. But there are instances, obviously, when you see them all day. They're more rare, is just all I'm saying. So around that time, a lot of the times, it's the best thing you can do is take more money off, and then you look to roll at that time if you think there's going to be more continuation. Just to save yourself some heartache, just in case it starts to come back on you a little bit more. It's all about being smart, protecting yourself, and skewing that risk reward that much more to the upside, right? Did you choose win over Diz yesterday due to the range break? Kind of. Let me show you both the I mean, the reason is too, I know Beth's going to be on it anyways, right? But the breakout on win, I mean, just look at the chart on wins daily, right? It looks like it's just ready to rip. I mean, Disney was good as well, no question. But it didn't have as much range to the upside, I thought. Because there was this resistance level. And then right after that level, resistance at 134.32. For me, it always has to do with the range or risk reward as well to the upside. How much room does this thing actually have? If it has more room, I'm likely to take it. If it doesn't have as much room, I'm gonna go for the one with more room. It's like you have to get in within 10 minutes or you won't get the move. No, if something's gonna move for the first 2 hours of the day, you would literally have 2 hours to get into it, or let's call it an hour and a half. But yeah, if you want the best price, the best risk reward, you want to get into it as quickly as possible. Anyways, looking at win. There's another little range break that I always look at. I'm sure you guys can see exactly what it is. This one gives you smaller momentum moves, but they certainly are and can turn into bigger moves. Does anyone recognize what that pattern would be? There you go. Siri got it. Previous day high breakout. Previous day high breakout in the morning right out the gate will give you a bigger move in the morning. Previous low breakdown will same thing. You tend to get momentum off these moves. They can give you continuation into a recent range. If it goes through that level, it can snowball and become a momentum mover all day or for the middle or most of the day. But primarily, you're going to get pretty much a move in the morning and then one and done. In this case, win, nice little pop, done with it. Let's take a look at Facebook. I mean, this one's very black and white. I mean, if you can't see this, I mean, you're blind, right? But this the thing I like about this Facebook is it's not a range break on the daily. It's just something you just have to recognize. The nice thing about when we look at the FANG, guys, is we look at the FANG every morning. We're staring at it. Is this a pre-market high break? It's actually a last day high break to all-time highs after a recent range has broken to the upside. So it broke the range to all-time highs the day before, closed above it, and then it broke that level to all-time highs, right? So basically you're looking at a last day high breakout to all-time highs. So it's a range breakout to all-time highs, essentially. And these are the moves that will give you the biggest momentum and for the longest period of time. And you can see obviously that it continued to go up the entire day, right? Close at the highs too. Same sort of concept, except now we're just talking all-time highs. So one thing I got a question for you guys is, it's great. Now we understand what I'm looking at and why. How do you figure out when these things are occurring? How can you figure them out? Alerts? Okay, let's before that. You got to be you have to look at the chart first and foremost. Look at the chart and recognize the patterns. Now, it's easy to see when they're occurring, but what you need to do before they occur, like Siri said, was set alerts. So you have to look at doing due diligence on charts. I mean, you guys think I just walk into the market every day without knowing what's going on? I know what's going on in the market because I'm always looking at charts after hours and during the day and setting alerts. And you should too. Because you start to recognize, oh, this thing could have potential. Oh, this looks pretty good. Oh, this could have potential. That's what we want to do, is we want to make sure we're looking at opportunities that are predefined good setups with, good risk reward to the upside, as if they're breakouts, or to the downside if they're breakdowns, and setting those alerts. Now, when those alerts get triggered, we bring up the chart that day and we look at what the hell's going on and we make a decision very quickly. The cool thing about if you do a little bit of homework, you're going to remember, oh yeah, Facebook's breaking all-time highs. And you're going to make a decision very quickly what to do. So, good idea. That preparation that we do every single morning too, guys, which takes us literally an hour and a half to do. I wouldn't be able to do what I do in the morning unless I did the preparation. The consistency wouldn't be there. Preparation helps so much. But that's if you want to do it on your own. If you want to just be able to see what's going on when alerts get triggered, or when you get an alert from me, these are the things to be looking for to recognize, okay, this is what's going on. This should have and could have a bigger breakout move. I'm going to think about it and have that conviction accordingly. The next thing to do is, as it's happening, view the chart and ask yourself questions. What's going on? Is it breaking through resistance levels? Does it have more room to the upside? Is it riding the 4 EMA? Is it holding extensions? Is it acting like it has momentum, or is it giving me the characteristics that a typical momentum mover has? If you start check marking those things off in your head, then you start going, oh, this thing probably is going to have more room. I should roll it, etc., etc. Now, if you're trading and you want to know where something has room to if it's all-time highs, you know to use fibs. Otherwise, you're just plotting the peaks and valleys on a chart. The more range a stock has to the upside, the more room it's going to get. One thing I want you guys to recognize is as well. There's a couple characteristics about names that run that I'm always looking for. Now, if I look at like a Citibank over a Tesla, which one do you think is going to run more? Pretty stupid question, but what do you think is going to have more follow through? Tesla, right? Why would Tesla have more follow through? What are some characteristics that tell you about Tesla that is going to have more follow through? Meme stock, and I think that's actually kind of a joke, but it's kind of not. A stock that's very popular tends to have more volume on it. A stock that's very popular tends to get more eyes on it very quickly. Why is Tesla a meme stock, Kevin? That's actually a good thing you brought it up. Why is it a meme stock? Cult stock, but it's because the stock in the past has made huge runs before, right? And everyone wants to be involved in those huge runs. It's a huge FOMO name, right? What is a stock that's ran before? What do we call those? Former runners. Former runners, stocks that have ran in the past, are likely to run again. And every single time they break out, those are the names that we want to be involved with. So if you recognize a chart and you go, oh, this thing's ran in the past, or this thing always runs, it's probably going to run again. What are those names? If I call an alert, or you see a stock that is running, it like Roku, oh yeah, Roku always runs. When it runs, it breaks out as momentum. What else has some momentum in the past? Beyond. Facebook. Tesla. Space, yeah, Space is a good one. Apple. JPM, good one. NVIDIA, yeah. AMD. RAD. Amazon. Exactly, Netflix. If something has ran in the past, it's more likely to run again. So one thing that we bring further into what we're doing when we're looking at these breakouts on the daily and we're looking at momentum and trying to figure out what's going to run is we just start looking at the names that are presenting themselves to us. Because we could choose, there's going to be 20 or 30 or 40 names that are going to be breaking out in the morning out of these levels that look good. Default back to the ones that you know that have ran in the past, because those are the ones that are most likely to run again. In trading, history repeats itself. Patterns repeat themselves. You don't just see a one and done on something. Typically, it's going to happen again. Now, when we talk about extreme movement like a Kodak, yeah, that's a one and done movement. But you could see little, 3, 4, 5 point moves on that thing, sure. You won't see another 70 point move on it, or 60 point, whatever it was. So, obviously with low floats, recognize that. I mean, LFIN will never do what it did again. It might, but I would say there's probably zero chance, or close to it. But we need to think about that as well. I mean, that's just something to understand. We're talking more so about big caps anyways here in terms of momentum. Now, okay, great. We understand all this stuff. Now, let's kind of look at what a typical chart pattern looks like. I haven't really talked about channels and parabolic moves because these don't happen as much, and you're not going to really see them in the morning. You're going to see them intraday. And what I mean by this is a stock will trade in a channel, then it will break the channel to the upside and start going parabolic. You can look at these on the daily too. It's probably a better idea to look at these on the daily where you see it trading in a channel and it breaks the channel to the upside and goes para. Here's probably a good example. So if you're looking for a parabolic move to the upside, you look at a top channel breakout. Breaks the top channel, you tend to get a parabolic move higher. So if you look at that type of a setup as well, you can set alerts on those on the daily, or you can look at them intraday. You're not going to see them as much intraday, but it's still a great setup to be looking for. Let's look at the SPY, yeah. I don't know if you guys have realized this on the market, but check that out. Have you guys noticed that volatility is being higher this week? We've had more range and we broke out of basically a lot of choppiness. Well, there's your reason. We broke the top channel. Is there another channel there? Yeah. We're broken out of it as well. But something to consider in that regard. Now, the market probably will, maybe get a little bit more extended, pull back, and then flag break and push to the upside, which can cause more momentum. But top channels cause bigger momentum moves because you're breaking out of a basically a range. Whenever I look at a channel, and whatever the way you should think about a channel is kind of just like a range to the upside and the downside, but it's just trending one way or the other. That's all it is. I mean, that you could think of this as a resistance. You would think of the bottom of the channel as support. No different than a range, resistance and support level on a daily chart. It's just tilted a bit. Like later in the day when you get a parabolic move, does it generally pull back, thus treat the trade as a scalp? How do you differentiate range breaks as Momo scalp? Okay, so intraday, you don't typically get as much follow through. What is if it's just a technical breakout? The only thing intraday that will give you a momentum move is if it's game changing news. So if we get news like on Walmart the other day, how they're going to be doing the buyout of TikTok with Microsoft, you can get momentum on that intraday. Absolutely, that's game changing news. That's going to cause momentum. Those are the situations that you're going to get continuation on, unless it has that type of feel to that news. You know, it's not going to do much for you. It's going to pull back. It's going to give back the gains, etc. Has to be game changing. I would say a couple different things. Obviously, buyouts, game-changing news, positive PDUFAs, so basically drugs getting approved by the FDA on a biotech. Positive phase 3s will give you some, but not as much follow through. And then just news, something like this, like something that's literally pivotal for Walmart, which can change the way that this company's structured, change the way that investors look at it. Because now they're looking, oh, it's a retail company, but it's also tech maybe now. Maybe it's like an Amazon, who knows, right? But that's the other stuff that will cause momentum. Now, when we look at top channel breakouts, parabolic channel breakouts, these are the things that we would consider like on the daily or intraday. They're going to happen more so on the daily. We got one actually yesterday, intraday, which we'll talk about, which we traded at. It was QDEL. It was off the lows, but still pretty decent. I should just duplicate this. I mean, you can call it a couple different things intraday, but top channel break, which caused that parabolic move, and then it came back within it. I know we were mainly playing the flag breakout anyways, but that's why we went back into it and scalped it. Broke the 50 MA, broke the top of the channel. You got a little bit of a squeeze. Intraday, you won't get as much of a momentum name. So treat the others as scalps, Kevin, unless there's big news behind it. Yes, in and out, not as much conviction. Obviously, use the chart to stay in it. You know, if it's holding the 4, all that stuff. Obviously, you want to stay in it as long as possible. But if not, take it off. Anyways, so channel breaks, stock will go parabolic. More room, more momentum. If it's a daily chart, you're likely to get multiple days of it. If it's intraday, it's likely to happen quick and be over quicker. So you break that range, you break that parabolic move, you're typically going to pull back to the top of the channel. You break the parabolic move to the downside, you're typically going to bounce back to that downtrend channel. Something just to recognize there, especially on these moves that happen intraday. Flag breakouts, we know this, don't need to go through that. Obviously, these cause momentum. You can look at them intraday. You can look at them on the daily. When we're talking about momentum moves today, I'm not talking about a intraday momentum move where I'm looking for a flag. I'm looking for a flag break on the daily. I want to see a big move. Has to have a flag break on the daily with range to the upside. Range breaks, this is the number one thing that I'm looking at in terms of chart pattern. We went through a whole bunch of different examples of this already, but this is the key. Intraday, range breaks will give you nice movements. Starting again, guys, all-time high range breakout, number 1. Daily range breakout, number 2. Number 3, last day high range breakout or low breakout. Number 4, intraday range breakout. So breaking the intraday range to the upside or the downside. That's all I care about. So if we're looking at charts, obviously you want to see volume increasing, buying or selling in the direction that we're looking at. If we're looking for follow through at the end of the day and we want to swing something, what do we want to look at the end of the day? It's pretty simple. We want to see charts closing near highs, charts closing near lows. Why? Indicates strength, indicates that there's still buyers and no one's taking profit into the close. People are still trying to get into the stock at the end of the day, which means they're trying to get into the stock at a time where there's going to be more risk to the downside. And that should indicate to you that the stock's more bullish. Just from a psychological standpoint, you got to think about what's happening there. People are rushing to get into the stock at the end of the day when they know they have no control over what could happen overnight. And that in itself is bullish. And no one intraday is taking profits at the end of the day. So second reason that's bullish. That's why those names are likely to see more continuation. Also, when you close at the highs at the end of the day, close at the lows at the end of the day, the trend is pretty clear in the short term. You look at the hourly chart, you see that there's an uptrend, you see that there's a downtrend. So it causes the trend to be fairly clear as well. Now, I want to talk about, that this PowerPoint was kind of just to like break the ice in terms of momentum and stuff like that. But I want to talk more about, okay, so we get a momentum trade, we recognize it in the morning. How do we take advantage of this? How do we trade this to the upside? So I'm looking at something like Facebook all-time high range breakout, right? I have my levels set up. I usually do this stuff in the pre-market, so I don't have to do it intraday. But if I'm doing intraday, I'm doing fibs or whatever to the upside. Whenever I'm trading momentum, and I think I'm trading momentum, so an all-time high range breakout to the upside, what I try to do is I look at the first resistance level and the second resistance level, and I try to pick a strike either within that range or at the second resistance level. I try to go out further. If it's earlier in the week, you can go it even further because you're going to have time and you're going to have a lot more premium coming into those contracts. If it's an all-time high range breakout especially, you can probably go go decently high above that next resistance level. But that's the key, is we want to look at how much room it has to the upside and try to pick something we think can get in the money if it breaks the second resistance level or gets close to it. So that's how I think. So in this case, when we looked at Facebook, we took the 285s right out the gate in the morning. Sorry, that was this day. Looking for those to get in the money, which they eventually did, and obviously we got further continuation higher. And then we rolled on this thing into an even higher strike, which was the 310s. Okay, good question. When to roll? Let's talk about this first. When to start selling it, and then we'll start talking about rolls. When to start selling it? You sell into resistance levels. Obviously, that's number one. Sell into extensions, number two. Number three, sell at the L2. On the L2, when you see weakness. Number four, you're selling at increments of usually, if it's a momentum, you try to get like 100% for your first sell. And then, maybe if you start to see weakness around 400 or 500%, 300%, whatever, you start taking some more off. But keep it very simple in that regard. Resistance, weakness in terms of momentum. Let's slow down on the L2, slow down in volume. And then at certain increments where it makes sense from a risk-reward standpoint to take money off, which typically is 100%. Now, when do we actually start to roll contracts? We start to roll contracts on what we want to see is pullbacks and flags, essentially. That's my number one thing, to roll a contract. But sometimes I'll roll a contract into momentum if it's just continuing. Sometimes I'll roll a contract into a momentum move if I see continuation higher. Now, what is a roll? A roll is when you take profit from your original position and you start buying a higher striked contract, anticipating a bigger move to the upside. What you're doing is you're not taking any additional risk, and you're able to stay within the trade or make more money on the trade by doing so, by doing this roll. So if we're looking at a roll on Facebook, for instance, as it's running to the upside, we have the 285s, we sold a bunch of them, and we looked at the 310s. The reason why we looked at 310s was they were cheap, which is typically what you want to look at, a cheap contract, a cheaper contract that's further out of the money. I want to look at more of a roll. What I like to do is try to get into a roll that's more so like a delta trade. So what I try to do is I try to find a delta that is close to either 50% of the contract's value or higher. If I can get into a roll like that, that's my favorite type of roll. Sometimes there's just no situation like that, and then you just look at, okay, where's a contract that's, cheap enough to get into the money? But other than that, you want to try to find something that can have a high percentage move. Because if you're rolling your profits into a contract, you want a higher percentage move, right? You want that to move up 100% or 200% because now you just doubled your profits that you made on the original position or tripled them or whatever. You're going to get paid you're going to get a larger return on your investment if you get into a situation like that. So you want to try to find a delta that's higher in compared to that contract price. More of a delta skewed option. 50% or higher, Kevin. So let's say the contract's worth 40 cents. I would look at a delta that's 20 cents or higher. I would want the delta to be 20 cents or higher. Otherwise, I probably wouldn't take it. So that's the whole concept of rolling. When do we want to roll? Two situations, pullbacks and flags, essentially, or pullbacks and then another breakout. Let's just call it that. It makes it a lot simpler. So what we look at is after the initial move to the upside, because nothing goes up for forever, guys. Even if it has momentum behind it, you're going to get a pullback. It's either going to test an EMA support or some sort of support, and that's great. You can buy off support levels, but guess what? Support doesn't indicate there's going to be a reversal back to the upside. It just indicates a testing support, and that's why I don't like to trade off support levels as much. I like to trade the breakouts. Once you break that trend, the downtrend, you get a trend reversal, essentially that's setting up with a higher probability. That's when you want to look to roll your contracts into something higher. So that's one situation to do it. The other situation to roll a contract is when you get a breakout out of a resistance level and you have a lot more range to the next resistance level. If you have a lot more range to the resistance level, then the risk reward is going to make sense to roll anyways. Don't wait to roll, just roll it right away if you see that there's enough range for you to make, either, I would say 100% to 200% on that roll. If you see that, then it's worth it. If not higher, why not? So you can roll into momentum. You can roll into a pullback after the trend breaks. Two situations to do it. I do both a lot. The rolls you want to take, try to look at more of a delta skewed option. If you can't find a delta skewed option, then you look at a contract that you think can get in the money, either that day or the next day. Now, one thing we need to consider, guys, if we're trading options, the equity side of momentum is super easy to play. It breaks out, you know where the levels are, you take the trade, Bob's your uncle. Easy enough. Options, a little bit more difficult. We got to think about options on different days of the week. So we're talking about, Monday, Tuesday, Wednesday, Thursday, Friday. I act differently on different days of the week. Monday, little premium decay. Go way further. Contracts are going to be more expensive. You can go a lot further on Mondays than you typically would. Four to five strikes easily. Depending on the contract. If we were talking like a Tesla, you can go out like 100, 200 points, 300 points. Maybe, even 500. That's going to change. Tuesday, similar to Monday. Not as far out, but still a little decay. Wednesday, I start thinking about expiration. Decay will speed up on Wednesdays. Closer to in the money, I'd say like probably 2 to 3 strikes out. Can still go cheap. Thursdays and Fridays, I group them together almost. At the end of the day, Friday is almost like a different animal, but Thursday, Fridays, guys, closer to in the money, delta skewed on Thursday. Friday, don't give a shit about the delta because it doesn't matter. Look for it to get in the money or just at. So, couple different ways to look at these contracts. Monday, Tuesday, you basically have a lot of time for the week, so you're going to have less decay. You can go out further and you're going to be fine. This is for both right out the gate and for the rolls. Wednesdays, you got to start thinking about expiration because you're going to start to get more decay in these contracts. If something doesn't go your way, it's going to decay a lot faster. Go for if it's really far out of the money. So you want to go for a little bit closer to the money, 2-3 strikes out of the money, most likely around that. You can still go after the cheap contracts. They should be fine. And if you're right on the direction, they should move up nicely. But definitely a little bit closer than Monday, Tuesday. You can't go as far out. Thursdays, you want to look at closer to in the money and delta skewed. So higher delta to price. They can be cheap still as long as the delta makes sense. And you don't want to go, super far out of the money, but the delta is really going to tell you if it makes sense or not. And then Friday, similar to Thursday, except for we're looking for contracts that can get into or just at the money. We're basically treating on Friday contracts as, you guys know Friday trading, Lotto Friday, but we're looking at these contracts to almost replace equity if they can get in the money, because then we start getting dollar moves, right? So this is all based off of risk reward as well, guys. Look at your levels. Look at what you think can get in the money based off of the actual move of the underlying stock, and then pick your contracts accordingly. Now, it's notable to think about this as well. If you're wrong on a momentum move, guys, what is it? If you're wrong on a momentum move, what are you seeing? First of all, what would that indicate? Volume down, no. If you're wrong on a momentum move, what is occurring on the chart? If you're looking at a daily or an hourly, what's the chart pattern there? So I'm just scrolling up. A couple people said it. Rejection. You're getting a rejection on the daily. You're actually getting a trend rejection or trend breakout rejection. So you're hitting a resistance level. You're getting a full rejection on the daily. If a full rejection happens on the daily, guys, should you stay in the position or get out? You should get out, right? You're wrong. If a rejection happens on Monday, Tuesday, you can give it a little bit more time, but you still want to probably exit. Wednesday, Thursday, Friday, you're out quickly. Why? Because it's going to come in on you very fast, which means you can have a tighter risk reward if you want to, and you can be okay with that. The reason we also 100% want to scale into trades, guys, is because if this happens and we lose 50% on a quarter size, who cares? That's 12.5% loss on your position. It's nothing. But if you had full size on a lotto position right out the gate and you're wrong, you're gonna get smoked. The reason why we have lotto trades on Thursday, Fridays is because we want to make sure that the risk is controlled. Wednesdays we use stops for the most part. But just a concept behind that risk control is you don't want to hold your positions if you're wrong on one of those rejections. Either you sell it or you just have your tight stop and you get stopped out and you move on. Will all the momentum trades work? No. If you do a little bit more research and due diligence, are you more likely to get into one that will work? Absolutely. If you put in the work to find the trades, you will get into a trade most likely that works. I think it's worth noting and worth looking at when we consider range breaks to the upside, guys, that are happening. You got to consider what is going on in the market. And this comes to my last thing I want to really talk about, which is what's going on with the SPY and what's going on with the VXX. And even what's going on in that sector. If you see that the SPY is now at a place where there's a lot of range to the upside, then you're probably going to see more follow through on charts intraday, which means you're going to see more momentum intraday. If you see that the stock market is stuck between a range, then you probably won't see as much follow through, which means you won't get as many movers. You will still get relative strength and weakness, but you will not get as many momentum movers intraday. In the morning, you'll probably get, the same sort of amount, but you won't get, full sectors all going at the same time. You'll probably get one stock out of that sector moving. It doesn't really matter. All you need to find is one stock that works. That's it. And to recap what we're looking for, guys, when we see a chart moving with momentum, we're looking for resistance to break to the upside, resistance levels to break. We're looking for volume behind it. We're looking at the L2 for volume to be confirming that, yes, there's definitely volume. On the chart, we're looking for it to be riding that 4 EMA to the upside and going through resistance levels. If there's extensions, we want those extensions to hold. The longer it rides the 4 EMA, guys, the more momentum we can attribute to that move. Breakouts on the dailies, we know what to look for there. Just talking about intraday here. It's not hard to recognize this stuff in the morning when you know what you're looking for. I haven't really gone through this is exactly what I look for in the morning to find these names. This is why these situations, I'll go, I think this is the one. I have conviction on this name because I'm just looking at the 4 EMA. It's going through resistance levels. It's got the range to the upside intraday. Quick little recap as well. Best momentum movers will be always all-time high range breakouts. After that, range breaks on the daily with room, flag breaks, top channel breaks, and that's pretty much the extent of those types of patterns. So, pretty straightforward stuff, not very complicated. I think the more complex thing to talk about is what, after you've... The most complicated thing is literally setting this stuff up for yourself, and then, alert gets triggered or you see a pattern occur, you have to view the daily 100%, and then you just view the intraday. Basically, if I was looking at a momentum move that just some sort of alert triggered or I got an alert for it, I'd bring up the daily chart and the intraday chart. I would look right away, okay, where's it got room to? What's going on? Intraday, I'd be looking at 4 EMA, volume, L2, time and sales. Next thing I'd be looking at would be the resistance levels. If it starts to go through them like they're nothing, great. Third thing, obviously, if I'm trading options, which I probably would be, what am I going to be taking on it? So, pretty straightforward stuff. Not super complicated, but very powerful. Any questions? No questions? Is this thing broken? Wait. Do you ever check check the ATR of stocks? Average true range. Well, that's what the Keltner channel is showing us. It actually shows us the average true range. Sometimes I'll throw like a big cap on the 15-minute my spy chart, and I'll look at what the ATR is. But yeah. Any other indicators used besides EMAs and Keltners? Nope. EMAs, obviously this, time and sales, L2. There's nothing else that I really care about. I mean, obviously I'm using candlestick patterns, Fibonacci's, which it's not really an indicator, but support resistance. That's it. What you see, what I go over, guys, is what you get, and what I literally use. Got to, keeping it simple in trading is the best. Also, how do you differentiate between consolidation and a trend break? Well, consolidation would be stuck with between a resistance and support level. A trend break is when you would actually break through the top of it or the bottom of it. So like in this case, consolidation, you can clearly see that it's staying within this range. And I'd go, okay, well it's staying within this range. It's creating a flag pattern intraday. It's probably going to break out to the upside. Seems to be holding all EMA support, etc., etc. Volume still good. If you're in full position but things not working, do you trim some? JC, if I'm in full position and things not working, I'll either tighten my stop up or take some off, yes. I tried to get IQ for charting but not available for US people. Yeah, it's a Canadian platform. What's the one that's similar? TC2000 or whatever the hell it's called. Very similar. TC2000? Yeah, there it is. You look at that. Is there a specific promotion volume wise that helps you detect it will keep going, Sunset? If you're higher than the average or the relative volume, Sunset, you're likely to see continuation higher. I would say 1.5 times average. You're going to see, obviously, intraday, it's going to be obvious, like 4 times, 5 times, whatever, but 1.5 times right out the gate, then yeah, something's up. How to determine if a reversal or pullback? Use the L2, JC. Or sorry, a reversal or pullback. If it's pulling back into your supports and your trends are holding it in the short term, it's just a pullback. If these things are all breaking, it's a reversal. It's a rejection. Side charts are good setups you identify during the day. Yeah. How do you find pre-market tickers? Watch the pre-market, trading the pre-market in the open, Tom, webinar. I go through that. I do my entire morning thing. Basically, I'm using scanners to find gap up, gap downs, news, and then I go through charts based off of that, and I pick the ones I like. Do you have that on IQ Edge, average volume line? No, I don't. AI breaking like the one candle you want? You mean? I'm sorry, Leonidas, I'm not sure what you mean, boss. Breaking all lines in one candle? For what? The difference between a pullback? The difference between a pullback would be, it can be one candle, it can be multiple, it doesn't matter. What you'd be seeing is price going through all your support levels. So the trend would be broken, EMAs would be broken, essentially. And what you'll probably see as well is higher volume. What's Herbalife's thing? HLF? Oh, that's just a huge extension with buying coming in, yeah? Okay, yeah. Anyways, any other questions, guys, before we wrap it up? This webinar flew by. It was quick. Alrighty. So that's it, guys. I will upload this, video as I do usually, pretty quickly here. Other than that, have a good weekend, guys. I'll see you guys next week.